What does this stock have to do with whether the customer or consumer is doing well or not? Well, they're a buy now, pay later play. They are Affirm. Klarna, as Mark always says, Pete, is a privately held stock. This one publicly traded, AFRM. And yes, we had unusual activity in here. And they had what they call themselves a killer quarter. So just a few days ago, in fact, 1 week ago today, the stock was 30 and a half. I did this one on 3 at 3. Well, they bought the September 32 calls. Those calls, $2.51. How did that do? Well, today, Pete, the stock trades all the way up to 42. So the right to buy it at 32 when it's trading 42 is worth at least 10 plus a little time premium and so forth. So it stock's up 33%. This is a fabulous report, but also the third unusual activity that we've told you guys about. So if you haven't figured it out, you need to get this book. It's not an option. Mm-hmm. It's not an option is the book Pete and I wrote that helps you guys understand how to trade option strategies. You can claim the book for free. You will pay $9 to get it shipped out to you, but check out that book. Again, this is 245 pages of great intel. But as far as Affirm, Pete, would you buy it here or would you kind of hands off for a little bit after this big jump?
You know, I like so much about this earnings, John, that it's really kind of sucking me in. So to answer your question, I'll just go through a couple numbers. A year ago, they lost 69 cents. This year, they were expected to lose 48. They lost 14. I would say that's a pretty damn nice turnaround. They're still losing money, and that's my one issue. I still want to have companies that actually make money, but they're actually getting a heck of a lot closer. So it might be close enough now where you feel a little bit more comfortable about it. There are huge short interest here. They are getting squeezed. That's why this move, was it warranted? Yeah, I think a move of about 20% was warranted. I think the fact that it's up 33% shows you that the shorts are getting awfully nervous right now, John. The gross merchandise volume was up significantly year over year. Just unbelievable. It was $5.5 billion, now it's $7.2 billion. But they do lose money. That's my one concern. So would I jump on them? I'd probably start thinking about it. But I'd love to see that they actually can show us that this buy now, pay later can work and work and work. And I think it can actually. So I'm still intrigued by this one. It's not necessarily at the 52-week high. So again, it's at least worth looking at and then trying to figure out, can they continue to do this? I think they can. So I'm getting more and more bullish the more I talk about Affirm.
Well, you know, our good friend, Pete, Bryn Talkington, accurately said, you know, other people can compete in this space, which is true. In particular, you'd think PayPal, you know, with Venmo and all the rest, could decide, hey, we can run buy now, pay later. A bunch of other good companies could do the same. These guys have done a magnificent job of establishing a beachhead and holding on to it. Doesn't mean they won't get eroded. Doesn't mean they haven't already seen some erosion by others. But I'm very impressed by what Affirm has done. And I'm not a buyer of it here, Pete, but on a dip after the earnings, I think I will.